I literally think right now is the most compelling, even value-oriented time I've seen in 10 years of doing this, right? There were some times it was the same price as it is today, but we were 4 or 5 years back in history with, hundreds of millions less using it and, all that stuff. Um, and so I think given that we've had a 75% fall in Bitcoin, 80, 90, and some of the other things, we're really at incredibly cheap levels. And a couple of metrics on that. We've never had a period that Bitcoin's at the same price it was 4.5 years ago before. It is. So it's right where it was in 2017. And I got to tell you, like, nothing is built out in 2017 as it is today, right? We have so much more stuff happening, so many more people using it, all that. So just on a fundamental basis, it's better than it used to be, back in that era. And just a great metric for how cheap things have become. All of DeFi, $8 billion. That's crazy, right? We can complain about, this about DeFi is only people speculating, whatever. To be only $8 billion when the legacy financial industry is $2 trillion is just cheap. And like you said, it's very asymmetric, right? Say you buy all of DeFi and you pay $8 billion, right? You can only be down 8 billion. You might be up, 10, 20x on that. And I really do think we're at that level. We're so inexpensive on most tokens that the risk reward is fantastic. Obviously, it could keep going down. It could go down for another year or whatever. But it just doesn't feel like when you do an expected value type calculation, you can't, it just seems like you're going to come up with a great time to be invested.
Well, what's interesting is I see a lot of people who've been in the space maybe for the last cycle, the cycle before, and they're kind of well known now. And they're so scarred by the last cycle that they can't conceive that it could be different this time around. I look at this and, we've got the ETH merge, which we'll talk about. We've got significant potential catalysts around. And all I know is everybody's underweight again. Every hedge fund I speak to, every family office, every institution, they're underweight. And I'm like, and you and I know this, the path of most pain is usually where markets go. Well, I'm thinking, well, probabilistically speaking, it's up, not down, because everybody's expecting a new low. I can buy Bitcoin at 15,000. That's the kind of narrative. How do you think about the kind of upside, downside risk reward here?
Oh, I agree. The best time to buy is when there's a whole cottage industry of people predicting how the next 50% downdraft is going to happen. I see that all the time in research and everywhere, talking about the next shoe to drop or the next whatever, or the next Celsius or the next, no. That would have been really useful at 65,000, right? If somebody had said, hey, the market's probably going to go down 75% in the next 4 months, that would have been great research. Nobody was saying that. Everybody's massively bullish at 65,000. And now that we're, at 20,000, people are all like, oh, it's, we got another 50% to go, or it's, Fibonacci hits 11,000 or whatever. That's the best time to buy, when everyone's now an expert on bear markets. There was even a conference session recently about like the best short strategies. I'm like, no, it's terrible. Who wants to get short in this 75% hole, right? And again, no one was saying that at the highs. And to my mind, that, that's a great sign that it's time. Also, time itself heals a lot of wounds, right? Like whatever leverage people had, whatever distress they were in, it's been 8 months since we were at the highs, right? That just stuff gets worked out over that period of time. We're already well past the average length of a bear market, or had the same depth, like it just kind of, you and I know, you can take pain for so long and then you have to, give in. And just, there's a period of time that markets just can't go down that much longer, because people, just everyone finally has given in. And I think we're at that point, that we've been down for 8 months. It's very easy for me to see the low having already been put in June. And, we're kind of back to the next cycle.
So look, you've been around this for a long time and a lot of people haven't. Talk me through the psychology of each cycle that you've been through, how it's different and how people need to deal with it. Because it's actually, we kind of flippantly say things like, yeah, we've been around, we've seen this before, but a lot of people haven't. And they don't really know what it means to accept volatility, because it's a feature, not a benefit, because that's why you get the upside. People don't understand that. So talk us through some of this to give people some help in this.
Yeah, I really think that is useful. I've been through about 4 of these cycles in the last 10 years. And I was sweating it in some of the previous ones. I was like, man, blockchain might not work. Maybe they'll outlaw Bitcoin, or, you know, maybe there's a flaw in the code and we're all screwed. There was just so many worries in these past cycles. And I lived it viscerally, getting in, and then it all goes down 80%. And what I would say is this time it is really, really a different vibe. There's hundreds of millions of people using it. 10% of all US to Mexico remittance is going over Bitcoin. There's a lot of people really counting on it. It's really a real system. And then even the risks, back in the day, there were a lot of risks, like, oh, maybe all the, custodians are going to get hacked. No, now it's like, Fidelity and Intercontinental Exchange doing custody, right? Like, the Mt. Gox era or whatever, that was, some dicier times. So a lot of the things I used to worry about are gone. And even now when people are like, well, regulation could be horrible, it's like, well, that's a glass 1/8 empty kind of mentality, right? 7/8 of the regulatory bodies in the US have already ruled, and it's great, right? Like, we still have the SEC to rule. But like back then, the IRS or FinCEN or whatever could have done something super horrible, and they all did great stuff, right? So although it's not fun, and obviously I love coming to work more when the markets are tripling every week rather than when they're down 80%, I really, for those people who are experiencing their first, crypto winter, I think this one's gonna be less worrisome or less like impactful than the previous ones were.
Yeah, that's my hunch as well. How about when you're speaking to investors? Because some of them have been with you for a long time, because you were one of the earliest funds in the space. But what are investors thinking now, whether it's the institutions or the family offices? And how are you seeing the breadth and change of investors? Because, you must see a difference in who it was. Because in the beginning, it will have been a bunch of Silicon Valley people, some people who knew you, some hedge fund people. But then it starts developing to family offices, then institutions. So talk about that mix and how that's changing, and also what they're thinking at this point. Are you getting inflows in, or people are still like, well, let's wait and see?
Yeah, so that has changed dramatically, as you rightly guessed. That in the early days, we did have a few institutions, but it was mainly kind of high net worth, tech, Wall Street type people. And it really has changed a lot in really the last 12 months or so. Massive public pension plans, endowments, all those entities getting in. And this actually is a great time because they've spent 4 or 5 years working through all their issues, all their diligence, all their investment committee, educating their trustees, whatever it is. And they finally got a yes. And now everything's pulled back and is actually a lot cheaper. And so we haven't seen enough people pull that trigger yet, because I think most investors are really kind of triaging their portfolio, right? This has been a once in a generation shock on the macro markets and blockchain. So everyone's kind of pulling back, trying to make sure they understand, their liquidity positions and all those things. But I do think we're in a pretty good spot where a lot of institutions did just recently get an approval. And in many cases, they allocated like 10 basis points to blockchain. They're 100 billion or hundreds of billions, under management. They, 100 million or whatever into blockchain. And so, you and I have seen commodities become an asset class over the years, emerging markets, all those things. I easily can see blockchain being an asset class 5 years from now. 10 basis points isn't the answer, right? Like, it's going to be 500 basis points or 800 basis points. It could be some much bigger number. So that's another reason I'm really bullish on the space. I've seen a lot of massive entities go through the really hard thing of going from 0 to 1 in terms of being on now. And now that they're on and they have 10 basis points, they could easily go to 20 basis points or 50 or 100 or 500, right? And so I think that's the story for the next 10 years, is all these entities that have spent many years getting to the point of saying yes to blockchain, ramping up to whatever a market neutral position will be 10 years from now. But it's, it's a lot higher than it is today.
And what about the allocation mix? I've noticed that VC has obviously been easier to get through investment committee, because it's just a tech VC investment. So people went there first, and the hedge fund space, or the secondary markets, the liquid markets, have been pretty devoid of capital. I mean, the entire hedge fund industry is $4 billion. Well, 60 billion went into VC in the last 18 months. Like you, I've been around markets for a long time. When markets are that starved of capital, it gives you outsized returns.